All right, first thing we're going to do. So this is currently on our chart. First thing we're going to do is we're going to show you how to start with a 4-hour view. The first thing, if you'll notice right here in the top left corner, it has 5 minutes. You want to go to custom. So you take this to custom here, click on crude, expand this out just by left clicking and dragging. See where it says bar interval 5 minutes. Change that to 4. You guys are costing the room money. We were long back in here. I'd still be in that trade. I'll explain to you why. We'd be up 300 bucks. Okay, so we're going to start with our 4-hour view here. This is the first thing we do. We come in after we talked about news, we did all that stuff, but we're going to start with, here's our 4-hour view, and we want to just put some lines down here. So top left corner where it has the little arrow cursor, you just go to horizontal line. You can come over here, and we're just going to start with the absolute extreme low there. And then the next thing you want to do is you always want to try to read as much information to the right side of the chart as you can first, and then you work your way back. So then you can see the most current level of resistance also ties into these lows right there. Right there. We're just going to click on that. So that is our current little box. So when this was the floor, and what we're doing is we're just creating a little ladder here. You can see how it creates steps here in a second. So when this was the floor, this was the ceiling. You can see how that also ties back into this place right here. So there you go. And then when this was the floor, this was the previous floor, and this just kind of exhausted. So you can see where this thing stopped for a second, came over, came down, came back up. So this would be basically this would be our couple of levels. Now, how many of these should you do? I don't think there's a right or wrong answer, but you don't need to do a ton of them because, again, you're going to be reevaluating these lines every day, okay? So this is the first thing we would do there. Now, once we have that, we would then look from 4 hours, we would zoom into a 5-minute chart, or excuse me, 30-minute chart. So 4 hours, we go to 30 minutes, okay? So once we're at the 30-minute, what we would do here is we would just kind of clean this up a little bit. Say, well, it's not exactly accurate. We want to drag that line down a little bit. You do that just by double-clicking. So you can see now it ties in there, ties in there, ties in right through here, ties into there. So that is a good number right there. Same thing with this one here. We may want to just up that just a little bit. Right through there. And again, it doesn't have to be exact. There are more areas anyways, but that's kind of the bulk of it. That's all we're going to use. The 30-minute floor is helping us put those boxes on there. And this is where Dave, you guys hear Dave refer to it as no man plan. If you look at current price here at $45.91, you can see the low is $44.20 and the high is $46.78. So we're kind of right in the middle. That's what he refers to when he says, we're kind of in no man's land, not really in anywhere. Now, once I have those levels determined off the 4-hour chart, the next thing I'm going to do is I'm going to take Fibonacci's off to 30. Not going to pull multiples. A lot of guys will pull clusters. They'll look for certain things at certain levels, and it just creates craziness in your chart. Okay. What I am going to do, though, is I am going to pull fibs off my 30-minute, and I'm just going to go from my range right there and right there. And you'll notice, see how relative to this move, we had a pretty good little number there, right? Up in here, we had some resistance. Here, we're at some support. This would be our support. If this trend were to continue, and we'll look at it intraday, should run back up into these highs, right? So this could possibly be a trade there. Now, we don't know that yet, but this is a pullback. So you have this big move up. We have this pullback. Now it could start running higher. Okay, similar here. Came down to these lows, came up here, pulled back, came up here, pulled back. If you guys remember when I was in the yesterday, this is yesterday's price action. When we were looking at yesterday, and this was the pre-market run, I said, I don't want to take this trade until this thing gets back to 45. So if you remember overnight, if you remember looking at the market during the market yesterday, this was 45.11 right here. Never came back to 45. But notice what it did overnight. Came right to it within the tick right there. Came right to 45. So that's what we were looking for. And that is because it was a measurement off of some of these key levels. Also looking into these levels up here. This is another one of the little levels of price that we were looking for. This thing's been around, actually. It looks like we're starting to get some momentum to the upside. Now, once we pulled Fibonacci's on a 30-minute chart, we never go back to it. We spend the rest of our time on a 5. This is where we start looking at the actual price correlation here of our trading, okay? Now, other people will draw lines, things like that. Whatever you want to use, you know, it's up to you. But really the idea is we like to see on our charts, we like to see pullbacks on our shortest time frame. This creates a low risk entry. So when we took that trade, it was sitting right down here, and we had to stop just below these lows, and we got ticked out for one tick, and then this thing's been off to the races ever since. So just kind of got washed out of that, just kind of showing you guys a trade. But you guys can see our methodology worked out, right? Now we're seeing a good little push. Now, but notice with the trend, and this is where we start really paying attention to the trend. Remember the first chart, we identify kind of our ladder. Second chart, we identify our fibs or kind of some key levels. Percentage-wise, that's all fibs are, just a percentage of that move. Here you can see we've got a little bit of a downtrend. Remember, lower highs, lower lows by definition is a downtrend. Even if this thing goes to here, it still has a lower high than the previous high, which means it still could put in a lower low. This isn't confirmation that we have a trend reversal yet. What we need to see this thing do is we need to see how it's going to interact with these highs as it comes back, and then we want to see it pull back into a lower high, and then we want to see it bounce and move higher. That's what we want to see. But we've got kind of a predetermined level or predetermined range here. I wish we'd taken that trade live. Meant to do it, but that's what happens when you're training here. All right, so with this said, the next thing you want to look at, I'm going to go ahead and zoom in here. We're going to compare candles. Now, you don't necessarily have to draw lines, and I'd actually encourage you not to, or boxes, but I just want you guys to be able to visually see this in my chart. You can see we have this peak here. We got that low there, and that's news. You can see how much news influences that price action. Then it rallied back up here. Came back in here, put in some lows. Came up here, put in some highs. But I want you to pay attention to the boxes compared to themselves. We don't know where this is going to end out yet. Looks like we're heading back up here, though. Maybe you would probably agree with that. Going to see some resistance up here. Remember, all these sellers stepped in right through here. Now, where momentum really kicks in trading is when you see these breaks of these levels. So if this thing pulls back and then it trades back up into this and we can absorb all of this overhead, this thing's really going to skyrocket. Kind of similar, you see where we had this high here, we had this drifting lower, and then we had it rally back up to these highs, and then we saw this major move higher. That's typically what happens. And I'll just oops. I don't want that. Let's go. So if you take this low here, you guys can see how it came up there. And then from there, it's come back to there. So this, in a sense, is put in a lower high. This is a low-risk trade. So if you were to get in here, if we would have gotten in at these lows, you're risking this much to make this much. So let's say you would have gotten in at that exact low there. You've been risking $400. So if you'd have gotten in there to make, that's 46, 120. 3-to-1 risk-to-reward ratio. That's where you're going to take all those numbers on this chart. See how this is kind of hitting some overhead here? It's kind of going sideways. It's not really pushing up higher yet. That's because we're starting to get into all these sellers. Now, would we sell here You could, but that's where you start talking about what's actually going to trigger a trade, okay? And that's when we start talking trading plans, that's what we look for. So let me delete some of these boxes. Really all you're doing with those boxes, you're just trying to identify trends. So we broke it. There it goes. So we broke the high of this previous candle. Now, really going to be the crucial level, let me just draw it for you guys, is how it interacts with those highs, the extreme price. So we're currently 17 by 19. That's going to be crucial, is to see how we interact with those highs there. Really could see a lot of momentum and a lot of prices above that. So normally when you're buying breakouts versus pullbacks, we prefer pullbacks. We like to get the markets coming down rather than going up, just because it helps create kind of a lower risk entry. Now, what I'm going to do now is I'm going to zoom in here, and we're going to talk specifically about each one of these candles. So if you're in a trade, we're going to compare here real quick. So you can see here's the low of this candle. Let me do this here. We're about to see this probably. If it breaks this thing's going to skyrocket. We're going to talk about how you can trade that, how that becomes tradable. There we go. There we go. We're going to teach you guys how to stay in trades longer too. Give me 1 second here. Just want to get some boxes for us so we can do just some basic comparisons here. One more. Okay, so what I've done is I'm comparing this candle here. See, this is that push. Once it took out and started absorbing these people here, that's why you're seeing this pretty aggressive momentum move here. But what I'm doing is I'm comparing real quickly this red candle at 11:10 to this candle here at 11:15. That's what we're comparing, okay? And what we're looking at is that for the 5-minute period, this was the close of the candle, this was the high of the candle, here was the low of the candle, and there was the close, okay? The next candle, there was the open, the low was down here, the high was there, and there was the close. So what we had here is this is where we start seeing the change in momentum of the actual market, okay? Now, the next thing we always want to do is you want to compare these highs. You see how higher high, lower low, and it's trading at the high of the current candle. So right there's the high, that's where it closed. It's trading at the high of the current, and it's trading above the high of the previous. So this would be our first basic trend change that we would look for here. Now, let's compare real quickly this candle here and just to discuss the difference. The first thing that's different is this candle did not close above the high of the previous candle. So we need to see it close above the high of the previous candle. That is crucial. So same thing here when you saw this move higher. We need to see it close above that because that indicates a change in direction. That also indicates the impulse of the price action, okay? So if you're looking at this particular candle right here, here was the low, here was the low here, so we had equal lows. Now we had higher lows, and here it's trading at the highs of current, highs of previous. We have a close above the high. So the next thing we're going to do is we're going to compare the next candle. And you guys can do this and follow along if you guys wanted to. You can see now we compare boxes. Now you have higher highs on the highs of the candles and higher lows. And you can see we've got this trading at the highs of current, highs of previous. Okay? And we're going to compare that to the next candle. And you can see how each time, notice how the bottoms are getting higher and the tops are getting higher of each one of those candles. That's what we look for. That's how we stay in trades longer, is we just compare the two previous candles. And we're going to talk about what we're seeing in this current candle that would tell us to possibly, not yet, but what this candle would have to do for us to stay in. But let's get all the way up there, and you guys can see higher, another higher high, higher low. So we would just stay with it, still in the trade. So this candle here would have to maintain a higher high like that, like it already has, but it would also have to put in a higher high there. Maybe not necessarily this range, but it would need, this blue box would have to be higher than this blue box for this to stay intact. Okay, you can, what this means here, this is where the market opens, it's traded down there, it's closed there, we still have 3 minutes. So we want to see how this candle finishes out. Sometimes you can get, kind of in this, what we're seeing now is what we refer to as breathing, just kind of breathing in and out, kind of inhaling, exhaling, chopping around. But that's how we would have stayed in that whole trade. Now, let's say you would have gotten in at the open of this candle. That's 83. We're currently trading at 18, so that is a $300 move right there. One contract. Now, where can you put stops? Now, ideally, your stop would be placed below the low of this candle, because by definition, if this put in a lower low than the previous, then we would anticipate this going lower. So you can just increase your stops if we had a trade on our ladder. Then all you could do is you could just follow this up. And let's just take a trade just so we can see an example of that. So we're in, and I'm just willy-nilly buying because I just want to go over this. But if the low is there is at 04, we would have our stop below that low. So we would bring this up, currently just the general stop. So we would bring this up to, let's say, 03. Again, my goal is not to make money. I'm not, saying take this trade if you're there. But I'm just wanting to show you, now I've got a stop below the low of that previous candle, and that's what I'm looking for. Where do I have my take profit? A lot of times what you can do is you can come in and say, okay, well, if it breaks above here, it's going to come back up in this range. So that actually looks pretty good. Let's just see how that works out. That would be our current range. But what will happen is the next candle here, let's say our next candle forms here. We got 1 more minute. So let's see how this candle finishes out. Now you can see if this candle forms, right, just how it is right now. That's how that candle would be. You have a lower high and a higher low. What does that mean? If I'm not in a trade, I would not be getting in. This would not be the trend change I'm looking for. But you can start to see, hey, we've got a little weakness here. But I would up my stop below this low. So my stop would go from the current price of 03, my stop would be placed at 12. That's where I put that back to. So we're going to wait and see how this candle ends here. We'll get our trade ladder back up just so we can see it. So that tells me that I'm going to move my stop up to this level in the next 1 minute, to 12. Okay, so now next candle's forming. There we go. Stop's been moved up. You can see our stops right there now. We want to see how this box is going to interact with the previous. So let's say it is right there. Let's say that's our low. Okay, now you can see we're trading at the highs of that previous candle. So those are our current boxes on this trade. Now again, this candle just formed, so we don't have any idea of what's going on yet. You can also get to a point where if this breaks out this high here, so let's say it takes out this high, higher highs, higher lows there, which would be 27, which is right here. Once it breaks above that level, we should again start to see the momentum climb higher. What we'll do is we'll take our stop and say, you know what, I'm not willing to risk anything on this initial trade. I'm going to put my stop back at break even. So let's see what happens here in just a second. We should break it though, because we're seeing this thing trade near the highs. It's kind of absorbing all those sellers up there, or all those sellers. There we go. So we would take this stop up now. We would put it right there at our entry price. Risk-free trade, ladies and gentlemen. Can't lose. See, now we're getting a major push here. So let's take our boxes and we'll just push it up here. Higher highs, higher lows. Now, at what point do we take trades off? Remember, there are 3 types of exits. You've got technical exits, you've got indicator exits, and you have, or 4, sorry, you have technical exits, which is what we just talked about here with these candles. The next form of exit is going to be dollar amount. So let me give you an example. Like right now in this trade, we're up 140 bucks. At what point do we say, you know what? I'm done. I'm happy. I'm just going to go ahead and flatten. You know, you can make that decision, okay, at any point. No such thing as a broke investor that took profits, right? Warren Buffett's famous saying. Another thing you'll look at when you start talking technical exits is we know back up in this level, we had sellers. We know we had sellers. We had people up there that were selling. That's what caused this big, huge sell-off candle right there. So we want to see how the market interacts with that. So we want to pull this down just a little bit, just to make sure that we get out once it gets up into that range. So we would just take this, and I'm just, again, we're just using this as an example. I can't lose on this trade. So, you know, you'll see here previous candle, there's the previous candle low. This would have to come all the way back down here for me to lose. So definitely got a winning trade here, but when do we get out? How do we take this trade off? Let's say, you know what, I think this is going higher. I think it's going up. I can just increase my stop there. And I think once this breaks this level, this thing's really going to be off to the races. What is your posture? You're up 120 bucks. What's your goal? Your goal is to make money. You're already there. You start to see some weakness here. 80 bucks. Worst case scenario, we break even. You guys saw that today in the room twice. So, but this is the way we look at it. Now, as this thing keeps going higher, I can just keep adjusting my stops above the previous candle low, knowing that once it changes, let's say I had gotten in here and I caught this move up and it didn't take me out, I would have gotten taken out right there in the trade, below this low. I would have gotten stopped out. So I would have missed all this drop. Now, I'll tell you one of the things that's frustrating is when you're right on direction, and again, we weren't right here, right? This wasn't our trade. Our trade was right here, was with this candle. But if we're following this up, worst thing that you can ever have to do is take a winner to a loser, psychologically. So just something to keep in mind. Again, this is just practice I'm showing you guys. Now, the other thing we'd like to see is we'd like to see this candle, this closing price, we want to see it close above that candle. That would really be crucial, that 27 level. We'd like to see this now in the next minute to really start impulsing higher here. Because then we've got higher highs and higher lows. We want to start seeing this continue to start pushing higher here. Again, this is just the breathing of the candle. Can't get caught up in the whipsaw of the candle. No need to look at anything less than a 5-minute too. 1 minute just becomes chop shop, just to give you an example. You don't need to be looking at this. This is garbage. So stick with that other chart. Let's go to our 5-minute. So let's say this low holds right here at 25. So we would want to increase our stop. Not yet, because we'd wait for the full 5 minutes. We'd keep our stop in place. Let's see if we can get this to push higher here. Because I want to get a stop at 25, basically below this low. I'm going to start seeing this thing start working higher. But if this candle stays right where it's at, let's say it does, higher low, lower high as it stands right now. And we look for the first sign of weakness in this trade, which means the first time it were to take out this level here, we would take that below this low. And then we wait for this to come back, and we wait for that correlation change to happen again, and we wait to take it higher. So current low on this candle is going to be right there at 22. So we're just going to take our stop. And again, we do this every 5 minutes, right? So this current candle, we're only 1 minute into this current candle. But our stop, we'll just say 22. That's the low. We just got stopped out. Made 20 bucks. There you go. Technically, we wouldn't have done that. We would have had to stop here, but we would have also gotten in back here. So I'd recommend, just for argument's sake, and again, this candle isn't done forming, so we wouldn't even have those numbers drawn yet, but what we would have is we would still have these. It'd look like this from our previous. So higher highs, higher lows. Let's see how this candle forms, and let's see how the next candle forms in relationship to it. So if it takes out this low, that tells us that we definitely have some overhead selling here, and we can start to see this come down. We don't know that yet because we've still got another 3 minutes to see how this candle is going to form. Beautiful thing about what I'm showing you is if you guys can time trade, correctly, you can see the major differences. Truth of the matter is you probably would have taken this trade right here, this opening candle.